Hello, good afternoon, everyone. I am very pleased to welcome to the virtual stage here, Greg O'Hara, founder and senior managing director of Certares. Certares is a private equity company which is focused on travel, tourism, and hospitality. And I think Greg will be joining us here in a minute. At least I hope, and I've been told to be very careful of that as it comes down.
It just ain't free. Lift your eyes for a minute to see. It just ain't free.
Hello, Greg.
Charuta, how are you?
Great, and it's good to see you. I think you're joining us from London today, is that right?
I am in Nice, France today, actually, just outside.
Great. We have had a lot of people in Europe at this time, and it seems like everything's open. We're a little bit jealous here because there's still some controls in Singapore. So, Greg, let me start. You've been very, very busy these last 18 months or so during the pandemic. Made quite a few investments, Getaway, G Adventures, recently Avia also. What was the thinking behind these investments that you've made in the last 18 months? Was it any different to the considerations pre-pandemic?
It was a lot different. What happened in around March of 2020 is my phone started to ring 2 or 3 times a week and then 2 or 3 times a day. And so people were looking for capital relatively quickly that they could deploy either to support their businesses during a downturn or to make an opportunistic acquisition or to pay down debt so their creditors didn't seize them. And so we set out, and I think the first investment we made was $300+ million into Tripadvisor days after President Trump shut the border. And I have to tell you that not all of my investors thought I was clever at that point in time. But I've been through enough of these downturns and upturns in my career that it was easy to recognize what the opportunity might be. And so we raised probably more capital during 2020 and 2021 than we'd done in the previous 8 years because the pacing of investment opportunities was bigger. We had a larger opportunity set to pick from, and we could pick only the best opportunities. So I would tell you that investing during the last 18 months was in many ways easier than it's been in the previous number of years. And so whether it was Avia or G Adventures, or I think probably the highest profile one was leading Hertz out of a bankruptcy recovery, all of those investments were in good companies with management that was relatively solid, that had good opportunities based on the recovery. And what they really needed was enough financial backing to be able to survive whatever the downturn held. And that's really what we provided.
So there was a lot of money chasing what were inherently solid businesses, right? And
so we're the only specialist in the space. So when someone decided that they wanted to take advantage of the market disconnection, it ended up being us that they called.
So your philosophy has always been that you kind of hold on long term to these investments, right? That you make. Does that hold true for the investments you've made during the pandemic? Or is it kind of a way to make some quick money? You're going to hold on?
Well, some of the money that we made on paper has been quick, but most of these investments have a return on capital employed much higher than the growth rate of GDP or the general market. So as long as they keep growing, we're going to keep holding them. And I think the easiest way to talk about what our philosophy is activity or liquidity. If the company's not up to something, growth or acquisitions or transformation, then we'll sell it. But so far, since we started doing this in 2012, we haven't sold anything.
Okay, and you invested in Hertz, as you said, also in LATAM and Azul, and this was the $1.5 billion distress fund that you raised during the pandemic.
Yep.
What makes the airlines so compelling at this point? I mean, airlines kind of tend to go boom and bust. Is it the coming boom? We've been talking about that quite a lot.
Well, the two Latin American airlines were kind of special cases. We're looking at some more right now, but in the case of Azul, Azul's a very good company. The recovery in Brazil and the domestic market was reasonably good. We put our money in to make sure they had one of the best balance sheets in the world. In LATAM's case, it was a bankruptcy that we participated alongside Qatar and Delta Airlines in a debtor in possession financing to basically provide them capital during bankruptcy. Both had good returns, both were relatively senior in the capital structure, and both had qualities about them that made them attractive. So for instance, in LATAM's case, in addition to the passenger business, which we thought was pretty good, LATAM's cargo business was excellent during the pandemic. Something special about Latin America versus other cargo routes is from Latin America, you tend to fly perishables north and you tend to fly durables south. And so during that time, we found that the cargo business was doing very, very well because the price of cargo was rising rapidly. So it was fairly easy for us to make an investment in LATAM on the DIP financing just based on the security we got in the cargo business.
And are you still, you mentioned you were getting quite a lot of calls from companies looking for investment. Is that still the case?
Yeah, so it depends where in the world you are, but in America, for instance, I think it's safe to say that in 2021, probably 2022, probably 2023, a company like the rental car companies will have record earnings just because supply is down because of the chip shortage and demand is up because of domestic car rental. In other places, we're finding that the recovery, the domestic market might not be as robust as in America. Very similar to what Peter said earlier on. There are different regions of the world that are recovering at different paces. And so the opportunity, for instance, where I am today in Europe, is probably going to be extended beyond some of the opportunities in America from a recovery perspective. Also, a lot of the European travel businesses, whether you like it or not, are seasonal and have very high fluctuations in working capital. So even though, for instance, Europe had a decent summer in some markets, the cash balances on some of those accounts, some of those businesses won't be sufficient to make it through the winter. So they'll need capital from outside sources. And because, again, we're basically the only shop in town, I think we're the only specialist in this space. And now we have, we have a platform for private equity. We have a platform. You called it distress. That's a bit of a misnomer. Maybe we call it an opportunities fund, because a lot of these companies really aren't that distressed that we're investing in. We have a real estate platform and we have a venture capital platform. So we've got a number of different products across the spaces, and everybody fits in somewhere. And so we've been getting our teams expanded, we've been hiring, and we'll be opening new offices in Europe and other places in the next little while. So a lot of activity going on in our neck of the woods.
And, I'm here in Singapore. What about Asia? What are your plans for Asia?
Well, I would say, first of all, Asia is a big market. And although in the West we tend to refer as Asia, we tend to look at things market by market.
So which markets are you looking at?
As everybody, I think. Well, we do like Singapore, and most of the things we do couldn't be done without the support of GIC and Garesh Carrera and the rest of his team. So they've been big supporters of ours for a few years now, and have been very thoughtful about helping us, not only in Singapore, but in the surrounding Asia area. We'd have very little exposure to China, and that's been done thoughtfully. We like Southeast Asia quite a bit. Japan has been traditionally hard to buy in, but markets like, Malaysia, Thailand, Singapore, Indonesia is a fantastic market. Unfortunately for us, we don't have a lot of people that can speak Bahasa, and the market is fairly fractionalized. So I think we'll probably look at investments in Asia and probably make investments in larger companies rather than smaller companies in Asia, where the management teams tend to be more mature. That said, on the startup side of things, there's a lot of interesting startups. It was absolutely awesome. I was in the green room listening to 3 youngish people represent their excitement for the travel business, and we want to be supportive of those businesses in the startup ecosystem in Asia, where I think some of the most innovative ideas are coming from.
So yesterday we had Fritz Demopoulos talk about startups, and he talked about 3 areas that he said were momentum areas: fintech, AI, and health tech. And so let's put health tech aside, but we've also heard from a lot of other sessions here about fintech and AI, obviously. So are you looking at anything in those areas? What do you think, is the future there?
So, travel and payments have had a long marriage. If you look at the way American Express originally expanded its card business, it was on the back of a travel business. And so we think there's a good marriage between travel and fintech. We haven't made any large investments in that space, but we're very interested in figuring out how we can facilitate our customers paying the way they want to pay. And we want to be able to also facilitate the merchant or the supplier receive payment the way they want to receive it. That's an interesting business to us because most of our companies, most of our employees have a finance background. And so being in the fintech spot is a good one. They tend to be fairly expensive companies, Charuta. So it is sometimes difficult to get invested at a valuation that's attractive because there's more capital than opportunities in that space. On AI, we've been using AI for a long time. I would say our companies are among the most robust users of data. As an entity, I think Expedia, Peter was right, Expedia's got probably the best data set out there of anybody at an individual entity. But if you take our collective companies together, we would have an even larger data set than Expedia. And we try to encourage those companies to work together. But the AI tends to be relatively simple. My son is convinced that Instagram may be listening to his phone even when it's off because they're able to present ads to him in his feed that he has not searched for anywhere online. We're not that good at anything yet in terms of predictive behavior, but we can use simple regression to make a lot of good decisions and present people with options that are attractive to their cohorts. So we've been using that at almost all of our portfolio companies for quite some time. And I think it's well known that our level of tech investing eclipses in every category, eclipses any one of our competitors in those areas. And so a lot of that is done in AI, machine learning, decision support, but we're a long way from companies like Facebook, Instagram, and Google.
Well, I can tell you, your son's not alone in thinking that. The amount of conversations I've had about ads showing up in feeds without searching, it's spooky. You mentioned something interesting there, though. You talked about, companies across your portfolio sort of working together. Is that something that you facilitate? And, is that something you mandate, I guess, also when you make an investment? Or do you leave it up to the companies to decide?
So we try to explain to the companies why there's an advantage to working together, but each CEO runs his own business. If you know any of our CEOs at all, you will know that we try to hire strong-minded, excellent operators as CEOs and senior management teams. So I don't think anyone's telling them anything to do. But if we can explain where there's an opportunity for instance, Hertz to work with Amex GBT on car rentals and integrate technology and provide a better customer experience, it's hard to say no to that because it makes sense. And oftentimes, one of the reasons that companies don't work with each other is they don't understand the company's forward strategy. They don't have a meeting of the minds in terms of how one might work together, and they tend to be fairly insular because they're part of the same capital base. It's fairly easy to get them to work together. So our travel agencies sell cruises for our cruise companies. We have a big distribution network, as you probably know, all over the world now, and they tend to sell products and maintain a lot of the same philosophies that those are shared, but each company makes a decision on its own. The best we can do is encourage. Best way to think of us as investors is noses in the business, fingers out.
Okay, I'm going to remember that and remind you of it the next time we talk. You've mentioned Peter Kern a couple of times. I have to ask you that, well, I have two questions for you, and I know we're short of time, but Peter said about subscriptions that they've consolidated their loyalty programs and that offers a lot more value than any subscriptions. Tripadvisor has gone in heavily on the subscription side. Do you see that subscriptions sort of business model paying off for Tripadvisor? Do you think that's the right way to go about it? And why?
Yeah, I think you're seeing the first iterations. So I think you're seeing the first iterations of subscription at Tripadvisor. I wouldn't tell anyone listening that is the last iteration of what they will see. So like with any product set, the iPhone that we used 10 years ago is not the iPhone that we use today. And so we'll be developing our subscription model to differentiate its product. And to be honest with you, Expedia is a great company and an excellent competitor. Booking is a great company and an excellent competitor. If Tripadvisor wants to monetize the 400 plus million users that come there every month to contribute content, look on things, click on things, it's not going to be as a direct competitor to Tripadvisor, to Booking or Expedia. Yeah. Those are our partners, not really our competitors. And anyone who's attempted to compete with them faces a tall order. So what we tried to do is something that was supplier friendly, and Booking.com and Expedia was not on strategy for them. And so our goals are maybe a lot more modest than the Expedia or Booking goals are. And so we're more interested in monetizing those users. And since the users are already on our website doing a bunch of things, the question was, what benefits could we offer them from being there? And that best suits a subscription service, because if you give someone something, it's very difficult to ask them to pay for it, right? So whether it's an upgrade or a status level change or a discount, right? It's the opposite of asking them to pay the then retail price for something and either earning a commission or capturing deposits or whatever it is that you monetize those things. So it's just a different way to monetize users, and we think it's pretty good. And I'd say stay tuned for more developments on that.
Right, time will tell, right? Okay, I have to ask you this: SPACs. you were one of the first to actually,
Yes.
you know, raise some money that way. SPACs have gone through this up and down recently. And so the sentiment right now seems to be a little bit negative. What do you think long term? Are SPACs going to be a viable option still for companies looking to go public?
Yes. Short answer, I got about 30 seconds. So this is a much longer answer than the one I'm about to give. But
we'll ask you at Phocuswright.
I would say the market got overheated. Yeah, that's fair enough. The market got overheated, and I would say companies that didn't make super attractive public companies were able to get public through a SPAC. Secondly, there were too many of them. So most of the stock market runs on a supply versus demand curve. And so the supply was too high, the demand was too low. So you saw SPACs trade out. I think that market will normalize over time. The good companies who deserve to be public by going through a SPAC will do well. The companies that shouldn't have been public, they will struggle and possibly get taken private. Short answer.
All right. Great. Well, thank you very much, Greg. We are out of time. It was great seeing you as always. And thank you for joining us here at WiT Experience 2021. See you soon. Thank you.